Good morning, traders. This is Brian Booth, Senior Market Strategist here with MF Global in Chicago with your morning update for the softs markets on Wednesday morning. The market waits all on bated breath here for a decision out of Europe today that should give us a pretty good idea of the direction of the majority of the markets going into the end of the year. It seems like if you've been paying attention to the crude oil of late, if you've been paying attention to the direction of the U.S. dollar and the euro, also the precious metals, seems like the market has been trying to tell us that there is going to be some form of an agreement that will be made here in Europe by middle of the day here, and I tend to lean on that idea just based on what we've seen. I think that if there was a lot of uncertainty in a decision, then I think you'd see quite a few of these markets backing off, or you'd see maybe just kind of a choppy, rangy market. And my thought here, I'll go out on a limb, is just to say that I think that Europe can't really afford to make any decisions that don't meet expectations for the market, because I think that the last thing that anyone in the world would want, especially the markets and especially the United States, who of late seems like our corporate earnings have been pretty fair here in the last quarter, these last few weeks. It seems like we're meeting or exceeding expectations for quite a few of the corporations within our indexes. I think that it would be catastrophic if they were to come out with a no agreement, or come out with something that does not meet expectations. What the end result would be a collapse in the euro, rally in the U.S. dollar, all commodities across the board would sink, and we'd finish the year probably in worse shape than we did a few years ago. I think the idea is to kind of finish on a high note, and then next year allow for some of these countries like Greece or Italy or Ireland or Spain or Portugal to find out a way to strategically allow them to back out of their, maybe lighten up on their responsibility or default on some of their debt. There's just way too many players in the big picture. These G20 summits are basically, I think, if we could have an insider's point of view, I think you'd probably find out that they're just figuring a way to plug up any big leaks, that to make sure that they what traders call or economists call kick the can until the end of the year, and then next year maybe this will buy them enough time to figure out a way to allow some of these nations that aren't doing so great or holding back, Germany and France, to allow them to sort of just kind of fade away or go into their own defect from the euro and go back to the way things were prior to using the euro as their currency. And I think that would be a good sign if they come out today with something that meets expectation, that for the remainder of the year we'll probably see stable markets, and then go into next year and maybe allow some of the air to come out of the bag. So how does that affect the softs? If you look at sugar and cocoa, they have their fundamentals are bearish. They'll take any back off in any one of these major markets or a rally in the dollar to really extend their moves lower. But in the short term, if we do have a continued rally or stabilization, they will be stable as well, and may even rally against their fundamentals. We know how that can happen, and we've seen that all happen before. Today, the markets, I think, will just kind of chop around until we get a decision out of Europe. We have a last price of 26.67. I think the sugar can still go much lower in the March contract. Major world surplus. I think the market got ahead of itself a few times earlier this year based on an expectation that Brazil wasn't going to produce as much as had been expected, but it seems like that idea has kind of fizzled away. So any stabilization, or furthermore, if there is any kind of back off in any of the markets, you see an extended move lower in the sugar. Cocoa 26.70. We're still looking for the 26.85 from September of last year to hold. If it starts to close above that for a day or more, look to maybe grab a long position, or if you're short from much higher prices, start to look to maybe book gains on your positions so you don't get caught holding the bag on that trade. Dees Coffee 238.85. I mean, this market could be a major wild card, and the fundamentals seem to, on a day-to-day basis, maybe not change, but the direction of the market may ignore the fundamentals. But I think it's all going to be largely based on what kind of decision we get out of Europe today. Lastly, the cotton is up to 100. Just above 100 even, so that market, just look at where it was at just yesterday. The potential for an extended rally here, if the grains continue on with their strength, you could see a bump up here in the cotton as well. But what we need to do is just get this European decision out of the way here today. Probably have much more information or insightful information for you tomorrow that will have concrete numbers and ideas that we can talk about and maybe build a trade for the softs for the remainder of the year. So keep a tight eye on the television here today and on the markets. If you're already in positions, you should see some pretty decent moves in the second half of the day today. hopefully the announcement will give us a little bit of a window here for the softs going into the end of the day to either adjust positions or grab new positions after that announcement. So if you'd like to talk about the softs or any of the other markets that we trade at MF Global, please feel free to contact my office at 800-993-6601 or by email at bbooth@mfglobal.com. And remember that futures trading involves substantial risk of loss and is not suitable for all investors.